Dear viewers, welcome to another edition of the Cryptoverse Weekly Report. Several volatile days on the crypto market are behind us, during which Bitcoin once again jumped to six-digit values on Monday, only to slide below $92,000 on Thursday, to the lowest levels of this still very young new year. Of course, altcoins also followed the path. Friday brought a slight recovery towards 95K, but sentiment is far from bright. Is the bull market over? Rather, it seems that the current, conditionally speaking, price problems are only of a short-term nature, and that they are primarily caused by uncertainties surrounding the future reductions in interest rates by the Federal Reserve, but also due to the cautious approach of investors before the start of the new administration. Investors position themselves strategically. So, the key word is actually caution, not bear, or the beginning of a bear market. We talk about all this in the following minutes. So today, among other things, we bring you strong economic data from the US and the announcement of the sale of a third of the US Bitcoin supplies crashed the market. Analysts expect huge amounts of capital to enter the digital asset space in 2025. This week's BTC weakness spilled over to altcoins, but there should be no doubt that altcoin season will definitely come. So, let's start the report. Crypto doesn't need much to soar, but it may need even less to come back down. And that was confirmed this week. Bitcoin jumped above $102,000 on Monday and ignited hopes that the holiday lethargy is over, that the leading crypto is slowly but surely starting an attack on a new price record. But in 24 hours, BTC lost most of the gains, only to crash on Thursday to the lowest level in 2025 of roughly $91,250. So, what are the key immediate reasons? Robust data that showed the vitality of the American economy, which perhaps somewhat paradoxically does not suit crypto, but also the news that the US will quite unexpectedly sell approximately a third of its Bitcoin holdings, which is actually a shot in the foot if that same country plans to create BTC reserves. The data thus showed that open jobs in the United States in November increased by 259,000 to over 8 million. In addition, the ISM Services Purchasing Managers Index, or PMI, a monthly indicator of business activity in the United States, was much better than expected. Both metrics show the current resilience and strength of the U.S. economy. This is a signal to the Federal Reserve that they can continue with a more restrictive monetary policy and the taming of inflation. In other words, it is now much more certain that in 2025, there could be even just one reduction in interest rates in the US. And this does not benefit crypto because it makes it less attractive compared to traditional investment instruments such as bonds, but also because that high interest rates mean expensive borrowing and less capital in the economic bloodstream. Such news and expectations led to a rise in yields on US government bonds and a jump in the US dollar index, or DXY, which is moving above 109 points, which represents the highest two-year level. DXY tracks the strength of the US dollar against a basket of foreign currencies and usually has an inverse correlation with crypto price movements. Then on Thursday, the market was further shaken by news that the US Department of Justice approved the sale of 69,370 bitcoins worth $6.5 billion seized from Silk Road. This comes as a completely unbelievable move in the context of the promise of forming strategic Bitcoin reserves, but also in view of the obvious hoarding, both public and secret, of BTC by numerous nations. It is not entirely clear whether this is one of the current president's last blows to the new administration on his way out, or if there is something else in the background. But with this move, the US will cede the first place of the largest national owners to China, which the new administration will certainly not like. And if the new leadership perseveres on building BTC reserves, the United States will be selling Bitcoin at 94 or 95K now, only to buy it later at almost certainly higher prices. So there really is no logic here. Some concrete figures show how stupid a move that really is. The US government has sold a bit over 195,000 bitcoins over the years, generating roughly $366.5 million in revenue. At current prices, the cumulative value of the Bitcoin sold would be worth more than $18 billion. But let us get back to the price impact of the news of the sale. It did knock BTC down to lows around 91K, but the recovery was almost instantaneous after the market digested that information. On the one hand, this really shows the resilience of the leading crypto, but it is also a realistic sequence of events after sentiments calm down. Actually, as Ki-Young-ju, the founder of the analytical company CryptoQuant, wrote on X, there is no room for panic because last year alone, $379 billion entered the market. In other words, the US government's sales would be absorbed in just 1 week. In fact, Bitcoin, just like the rest of cryptocurrencies, will remain in the bull market as long as fresh capital arrives. And that should not be missing in 2025. There will certainly be side trading, that is consolidation, just like corrections, but this is normal and healthy for the market. However, the expectations of most analysts are that the start of the new administration could turn out to be a sell the news event that will certainly have a strong bullish effect in the long term, primarily as far as crypto regulation and legislation in the US is concerned. And a clear legal framework attracts corporations and institutions of traditional finance, that is, heavyweights with huge capital. We expect more nations, central banks, and national equity funds to seek to establish strategic positions in Bitcoin, Fidelity analysts said. In the meantime, Matt Hugin, Chief Investment Officer of Bitwise, an American asset management company, predicts that the three sources of the insatiable demand in 2025 will be companies, ETFs, and national governments. And while users of Polymarket, a betting platform, give only a 27% probability to the fact that the new administration will create strategic reserves of Bitcoins in the first 100 days of work, signaling the belief that the American operationalization of this plan is by no means certain. This narrative itself nevertheless triggers a kind of political and financial game theory that will force other nations to think carefully about this move themselves, and even to start secretly buying BTC so as not to raise its price by public announcement. On the other hand, some approach it quite publicly. Bhutan announced that the economic center there will establish strategic crypto reserves. Bhutan's Gellifu Mindfulness City, or GMC for short, plans to create reserves not only of Bitcoins, but also of a whole basket of digital assets that, in addition to BTC, will contain Ether, BNB, and perhaps some other cryptocurrencies with a large market capitalization. However, announcements of possible crypto reserves also come from countries in Europe. Aleš Mikl, the governor of the Czech National Bank, in an interview with the local CNN affiliate, revealed that they are thinking about diversifying the state's reserves through the purchase of Bitcoins. However, he added that there are no active strategies for such a move yet. So by all accounts, the global adoption of BTC by many nations is only a matter of time. Whether it will happen this year or some next year is less important than the definitive entry of crypto into the mainstream that began in 2024. And here we come again to Fidelity analysts who say that we may be entering the dawn of a new era of digital assets, which will last for several years, if not decades. And in addition to nations, huge capital should also enter crypto this year from corporations and institutions, primarily through spot Bitcoin ETFs. According to analysts from the research and brokerage company Bernstein, the inflow in 2025 will double in comparison with last year to about $70 billion. And the inflow of BTC into corporate treasuries should also be doubled, from 24 in the previous year to more than $50 billion this year. As they say in Bernstein, crypto is now firmly on the radar of corporations, banks, and institutions, woven into the very fabric of our financial systems. They also reiterated their Bitcoin price target of $200,000 by the end of 2025, with the remark that this projection does not take into account the possible demand of nations, but only the institutional and corporate one. And the effect of the arrival of the new administration is also visible through a survey conducted by Bitwise, which showed that more than half of property advisors, 56% to be exact, are now more open to investing in cryptocurrencies. Among advisors who are already investing, almost all plan to maintain or increase their crypto exposure this year. And how can anyone then mention a bear market after all that was listed? Bitcoin is actually just at the beginning of its journey to become gold on steroids. With a fixed amount of 21 million, with a few million probably irretrievably lost, and 2 million each left to be sold on centralized exchanges and mined until 2140, when the last BTC will be mined, the scarcity is evident. There is no need to waste more words on current, and especially future, demand. And while the leading crypto continues to steal attention from alts, it is expected that the season of altcoins has yet to come because the announced pro-crypto legislation and regulation in the US should favor alt projects the most, and, subsequently, the prices of their tokens. However, this week has been a bad one for altcoins, as Bitcoin's weakness has spilled over into the rest of the market. Although there is the overall green on the daily level, the majority of cryptocurrencies are looking at the 7-day horizon in the red. Yet, the strong price fluctuations and redness should not deceive, as investors are getting ready for the altcoin season and are taking advantage of market drops, taking advantage of dips. This can be seen, for example, from the tweet of the analytical company Santiment, which showed a noticeable growth of new wallets, not only of BTC, but also of the leading alt projects, Ethereum, XRP, Cardano, and Doge. So, this clearly shows investor confidence on a long-term level. As for this week's prices, Ether is holding above $3,200, with a minus of 6.7%, but analysts predict that the second largest cryptocurrency is poised to become the next institutional favorite in 2025, despite its poor performance last year. With 28% of Ether staked, 3% absorbed by ETFs, and 7.5% locked up in smart contracts, Ether's limited supply and utility through paying fees and as a collateral asset in Layer 1 and Layer 2 networks give it the kind of intrinsic value searched by traditional investors. Furthermore, historical data also suggest that this could be a great year for the price of Ether and bring it to a new all-time high. In fact, the average returns in the first and second quarter for the king of smart contracts amount to 83% and 66%, respectively, with the fact that in the post-halving years, in 2021 and 2017, the return in the first quarter alone amounted to 160% and 518%. Meanwhile, XRP fell 5% on a weekly basis to $2.28, but it is precisely Ripple's coin that could be one of the big winners of the new administration in the US, as many believe that XRP is next in line for spot ETF approval. A similar narrative prevails with Solana, which has seen a double-digit decline, and its token is now trading at $187. But despite that correction, Sol is predicted to make substantial gains this year, and Sol's blockchain is emerging as a major competitor to Ethereum. At the same time, we should not forget that it has 4 times smaller market capitalization. Doge is down 9.5% to 32 cents, but suffice it to say that the leading meme coin is still pushed by Elon Musk, so 2025 should be bright for it. ADA has fallen below the dollar in the meantime, with a minus of more than 13%, but Cardano is growing and evolving. Plomin hard fork is scheduled for later this month, a major upgrade for the Cardano ecosystem that marks the end of a development phase and the start of something bigger. The update aims to implement fully decentralized governance, eliminating reliance on a central authority to make key decisions. As you can see, there are just a few weekly winners in the top 100. The ranking is led by XDC, followed by BitGet Token, Sui, Fast Token, Gate, and Mantra. Losers are led by AI6CZ, Virtual Protocol, Tahina, WIF, and Tau. And so, again with altcoins, we have come to the end of another Cryptoverse weekly report. If you've enjoyed the video, please give it a like, leave a comment, and we would also greatly appreciate if you click subscribe. Thank you for following, and kind regards.